July 12th, 2019, and happy Friday to you guys. And I hope you're having a good day. I sure am because I've been, as you know, bullish on stocks for quite some time, and Dow Jones just broke into a new all-time high yesterday, and it's looking rather good. So we're going to talk a bit about that. We're going to talk, of course, a bit about the S&P and other markets that we discussed over the last few days. We're also going to talk about the euro versus the USD. Now, if you're new to this presentation, this is a daily webinar we host here at investingcube.com and on the ATFX YouTube channel. You guys are most welcome to say hello in the little chat box. And if you have any questions as well, you're most welcome just to leave it there in the chat box as well. And yeah, so we're gonna kick off. Let's begin, and we're gonna begin with the euro. So let's do that. Euro, as you know, a few days ago bottomed out here. The market, I said that probably down here we're probably gonna try to bottom out, which we did, and the market moved upwards. And I was saying that if we buy here, stop loss goes here, then we could probably go for a 1-to-1 risk reward ratio, which is rather good for a short-term range-bound market, right? If you're dealing with a swing trader, longer term positioning, you can get better risk reward ratios. As well, if you buy a lot of dips in an uptrend, you can get some very good risk reward ratios. But when the market's doing short term, and then when it's a bit random like it is now, going for a 1-to-1 is usually just sufficient and enough. Because if you go for, for example, if we would go for 2 times the money, so you try to target all the way up there, then more than likely it's going to revisit the low and get you stopped out. Well, actually stop is down here, but it will most likely go down before even moving all the way up here in a range of a market. So the idea here was to go for this to 113. So we didn't go all the way up. We only went as high as 1286. But I think we can probably trade upwards over the next few days or so. Now, if you're not in this market, then it's too late, I think, at least. When the market is in the middle of a range like it is here, and there's no bias, then you know you might just well flip a coin and just see what happens. Just about anything may happen. But when we start to reach the lower ends of a range like here, or the upper end of the range here, then that's when things become interesting. GBP versus the USD. So the market here, as you know, I was bearish on the break here. I was actually short for a little while as well, but it didn't look like it was gonna sort of move in my direction. So I just closed that out after I think 10 to 15 pip loss. And I was sticking to my bearish view because the trend was still bearish, but you can see here it didn't really work out, and unfortunately it is like that. But I will still take this trade sort of any time. Why? Because the idea was to sell here, stop loss goes tight above the high, so I shorted at the 45 level. And if I'm not saying we would have reached all the way down to the target, but if we would have, then your risk reward ratio would be about 5.37 times. That means you can do this about 5.37 times. If you on the 6th time actually make a profit, it will cover for all the losses. And this is, again, that's a very good example of a situation where you can get a good risk reward ratio, something you can't get necessarily in the EURUSD. Now, looking beyond sort of the short term here and sort of being realistic about the current situation for the UK economy and the pound, Brexit is still going to be there, still lingering. This is just a prelude, I think, to what will happen eventually, and that's for a steeper decline. I can't really foresee the way the political situation is right now that we're going to have some sort of a rescue here, and then, you know, the EU suddenly is going to become very, very easy to deal with, and suddenly everything is going to be very good for the UK. I can't foresee that. So I still think we're going to be trading close to 120 or so over the next few weeks and months. I said months, not weeks. So for now, though, you know, people that got in late, they've been shaken out, but I think maybe from 26.25, so about a 50% correction or so, I think from that level, people are going to probably start to sell again, to target the 26.64 level, 23.64 level, and then target even lower. There's some people that say that, you know, people are prepared for what's going to happen. I don't think people are prepared at all for what's going to happen. And I'm just worried about the time, and I really hope it doesn't happen, but the time when, say, something like the London house market declines, then that we're going to be in real problem. Dollar yen trading sideways between 107.55 and 109. You have, at least if you look at the 4 hour, You have a bit of a bullish upside, and you know, you can ride this if you want to. So the question is, why would you be riding this? Well, it could be an idea if you think they're not going to cut as aggressively. It could be because you think stock market's going upwards. But I say, why not just trade stock market straight directly instead of trading this? So ignore this for now. That's what I would say. Let it trade sideways. It's like good food in the oven or something like that. It's not cooked yet. It's not mature yet. It needs more time to be baked, and then you'll probably have a bit of a bullish breakout or a bearish move. And if that happens after another week or two of consolidation, then that will be ripe for a good trade setup. Right now, it's a bit messy. Yes, I think if we take out this high, we can go upwards. We still had a bit of a bullish bias, and if we take out the lows, we may trade lower. But the longer it stays here, the better will the quality or the quality of the pattern be eventually. Let me see here. Gold prices. So gold prices are quite straightforward. They're within a range, as you know. These are the lows, these are the highs, but you can see that the momentum is still bullish now. You're creating higher and higher lows. The market tries to figure things out, and you have that little high here. Then you have the year-to-date high here. So I talked about it in an article yesterday, in a premium article here at Investing Cube, and there's a few setups there, which I find interesting. For example, taking out these highs open up for a multitude of different patterns, like a rectangle pattern, a flag pattern, and then up here, well, it's not highlighted, is the inverse head and shoulders pattern. So there's a multitude of bullish patterns right now, and to sort of kickstart that, I think we need to take out maybe 1430, maybe 1438. And it is possible to buy on these dips here as well. I saw this slide yesterday and then continued to move lower and lower. Fortunately, I was not around at when I touched 1400, because 1400 would have been, I think that would have been a good little spot to buy a bit more if you wanted to. I think in general, trade about 1381. Maybe 1385 if you don't want to be too far away from the action. Eventually this will resolve to the upside. On the other hand, of course, if it doesn't resolve to the upside, we take out this level, it's going to be sort of a big failure, and it's going to be so much disappointment, and we'll trade down to maybe 1357 at that point. And you can see here, they spent quite a lot of time here, right? So you have people, they bought here in the breakout. You have people that bought here. You have people that bought here, and you have people that bought here. And then you have everybody else that bought at higher levels. So this, if it goes lower, all these people are going to get panicked and they're going to get out of the market. At the same time, you could argue there's probably some aggressive players to short it here, here, maybe here, of course. And if we take out this level, these guys start to get panic. So this is an interesting pattern. You can't really say that about dollar yen, you know. Maybe some people short it here, some people short here, but the levels are not at the same level. So it's not very easy to have a position here, because when you're trying to find the level to trade, it's important to find that level that will influence the most amount of money, or most amount of people, I would say. Actually, money is probably better. Which level is going to influence the most amount of money? That's a good one, actually. Why? Because you can have several people with very small accounts. They buy here, they might be selling, but what you really want to do, you want to hit the guy with the big account that when he sells, the whole thing is going to collapse. And that's really what technical analysis many times is about, finding these levels where everybody wants to buy and where everybody wants to sell. And sometimes we need to get positions just ahead of them, sometimes just after, so depending on what's going on. Okay, this is crude, and it's holding up. You know, it's not that strange. You know, there's a lot of talk, at least in the UK, on the back of the situation between the British tankers and the warship, of this denials from the Iranian government that they didn't try to sort of intercept any British tankers, but they have, of course, said in the past they're going to take over one of the tankers, because the UK helped Gibraltar to take over one of their tankers. So it's going to be a lot of tense situation there, and I think that's sort of keeping prices highs. this could easily go upwards, because people right now are sort of thinking, okay, things literally just turned more sort of escalated more now with both the US and Americans aligned. Sorry, US and UK aligned, whereas before it was just the UK, US, and Israel, I guess, pushing that agenda. But we'll see what happens. Again, I think people are quite reluctant to sell here, or to go long here. Sorry, to sell, to make money on profits. But you can definitely have some guys to say, look, we had a nice little push to the upside. I want to take some profit, and that could potentially cause the price to trade a little bit lower. And I think if we trade down something like 59 or so, down here, I think they're going to start to rebuild the position. As for the S&P, new all-time high. We talked about buying at several levels here over the last few weeks. And the latest one, if you're not in the market already, is 29,082.3 down here. Trend is bullish about 29,058, and I think people will probably try to accumulate down here who stops just below. Now, I said I was going to talk about the Dow, right? And this is the Dow. So for people, so obviously I do these free webinars, and I do premium stuff as well for clients. And we've been talking about this for quite some time. So we have this big head and shoulders, head, left, right shoulder in the Dow, right? And this is a nice, very beautiful, well-behaved head and shoulders. If you look at something like the S&P 500, it's a bit weirder because you have obviously a double top. And this setup I did highlight for you guys, but it's not as clean. It's not like a nice horizontal level. I definitely have it here. So for the last few days, I've been accumulating a bit ahead on the breakout. In fact, I bought a bit more as well overnight with some limit orders, and there's so many different patterns here. They're all sort of pointing straight up. You got yourself your head and shoulders target, which is this one here, and then you have treating this like a rectangle, which gives you here, and then you have difference from here to here to give you this here. So we have a ton of different targets, but more important than head and shoulders, and more importantly, this thing is between sideways, so 1 year and 1.5 years. So every time the market is trading sideways, it's like energy being contained. It's like you squeeze like a coil, I think it's called, and then like a spring, and then it jumps out. It's a bit like that. Now, there's not a lot of explanations to why this is happening, except that the Fed is probably going to cut interest rates. Of course, any clever person would say, well, they're cutting interest rates because, the economy is going to do bad. We're going to have a recession. And again, it does not add up. Unless, of course, some very clever people out there really think we're going to get a deal between US and China. Who knows? Does it really matter? Not really. What is interesting, though, is that people are worried. So they're not telling you, look to buy here. They say, oh, look, because of these problems, this and this is going to happen. So it would have been different, like in Bitcoin. It's so interesting, market psychology. So this is Bitcoin, and we're trading down here at 3,546. No one was telling you to buy. They definitely told you on the way to buy on the way down. There are so many people, oh, it's going to go up, it's going to go up. We're down here, rock bottom, nothing is happening. Nothing really happens. We did, however, from a trend following perspective, highlight that break before it happened. The market started to go upwards. So we're pretty much here, I think. So at the beginning of June, like a month ago, we're about 9,000. Here. We're pretty much at 11,000. People start to tell you, forget about the old all-time high at 19,800. Target 100,000. Lovely, right? If they would have told us down here, I would have believed them. But up here, after a move like this one, of 248 percent, yeah, of course it can go upwards, right? But that also marked that short-term high in the in this market. Doesn't mean that it can't go upwards, but as you know, the whole thing tumbled with about 31% just a few days after literally these guys announcing that we're going to trade all the way up to 100,000. And it's different analysts from various brokers, like normal brokers that have been around for some time, people on the news, people on Twitter, people like that. And it's the same thing here with the stock markets. Right now, they're not actually telling you to buy. In fact, they're a bit worried and probably telling you to take it easy. And again, we'll see what happens. I was also in the camp of taking it easy for quite some time because of the news, but this is a massive breakout out of a massive head and shoulders pattern in the Dow, and we need to remember that the stock markets usually climb on a wall of worry, that's what they say, and sort of peaks at the when everybody's sort of optimistic. So when people start to tell you, look, it's time to go long, that's when it's time to get worried. Managing this in the short term, should we all go out and buy now at 27,164 too? Probably not, unless you already bought. We talked about a few setups in the S&P already, but here I think we can have easily a pullback to that breakout point, and as long as about 26,656, then the trend is going to be bullish. I think we might go down a bit, but then most likely upwards. As for the German DAX, it's really struggling, unfortunately. It's struggling to stabilize, but I'm not going to give up on this one yet. So let's clean this up for a bit. Actually, let's not clean it up. So we still have, as you know, that longer term head and shoulders target up here at 12,900 or so. So we need to reach that. And so what's happening here is you had a bit of sell-off, which is fine. And technically, the longer term trend is going to be bullish above this level here, which is 12,174. Now, what I did is I just put some fibs on this, like this. And I said a few days ago, probably around the 50% pullback level, I think that's what people are going to start to buy. And they did buy because we moved up, but then we had a bearish day, and yesterday was really wobbly as well. And the market really struggles to trade much higher. And my trend finding level is down here, around the 12,248. While this is the trend finding level, you need to look at it from the following perspective. If some product that you like is, really good quality product, well, really good quality product to begin with, they're never sold at a discount, right? And then, of course, sometimes there will be, but in general, they will not be at a discount, right? And then some other good stuff, for example, when you want to buy clothes, like they have all the summer collection is kind of starting to become winter, right? It's still quality stuff, right? But they're not gonna, people not gonna need it, and don't want to put it in and store it away because the next season is gonna be totally different fashion, right? So what happens is that they give you, what is it, 15% discount, then maybe 20, and then 30, then 50, and then at the very end they'll have a 60% discount. Now the stuff at 60% discount, it's not going to be the best stuff, right? It's going to be the stuff that people really don't want to buy because the style is not great and price is too high and all of that. And it's the same a little bit here. If this goes all the way down, that's a sign that people genuinely don't want to buy this, because right now they're getting at least on this leg, they're getting a 61.8% discount, right? Which is fine. Like 38 up to 61, that's sort of the discount levels I like. My preference is to actually try to get involved between the 50 and the 38. And we're starting to see some stabilization here, but it's a little bit worrying that people are not picking this up. So this is the final sort of discount level or fib level at 78.6, and really, as long as you trade above this level here, I'm gonna be bullish. But trade below it, then I'm gonna give this up. You can investigate as well the 1 hour chart, and you can see we are creating lower highs, and also some stabilization in the lows. And I think as a minimum now, for this to turn around, we need to trade about 12,403, because there's one way, and that one way is just to catch as we go into the buy zone. That's my preference, really. It's not so much thinking, it's just buying, put your stop loss, set and forget. You can as well sometimes, if you're not sure but you really want to buy it, you can just track the highs like this, and then stop loss would go, entry would go when this short-term trend aligns itself with the big picture. And I think the beginning of that alignment may be on a break to 12,403. At that point, we stop creating these lower and lower highs. And at that point, probably going to go up a bit, and then probably down a bit, and then upwards. And we would have carved out that low. And that's pretty much it. Okay, I think we're going to wrap things up. Let's just see if you guys have any questions. And so, guys, don't forget to check out the page here, right? And we have Nikos publishing a lot of content in the morning. We have Inu as well. Inu's been trading for about 9 years, since 2009. And he offers, some short-term setups, stops and things like that included usually here. And he publishes about 3 articles a day. It's supposed to be 5, but it's 3 right now. So there's a lot of stuff happening in the afternoon. Myself, because I'm working with these new guys and we just got it up, I'm not publishing too much. But me as well, I'm supposed to be publishing maybe 3 to 4 articles from about 10 o'clock up until about 3 o'clock. So there's a lot of content here. The website itself, the numbers are going straight up. So I'm very happy that people are coming back and watching the stuff. And I think you should bookmark this site and come back and read some stuff here, because some of the stuff I don't cover here, I write about it. Now, as I said before, there's some of these articles which are locked, right? And like this one here, you just need to register, become a member. It's very straightforward. Click on register, free membership because it is free, and then you put first name, last name, email, and then here, and then you click on confirm. You will need to verify your mobile number, and then that's it. You're done. That's it, really. That gives you access to all these different premium articles that we produce during the day. The idea is to about 30% of all the articles, so for members only. If you're interested in some specific markets, like you're looking for forex news, indices, commodities, and cryptos, you can just click here. You can also just click here. If you really know what you want, you can try to see here. We do cover more markets than these ones, but what we have under the tag section is just the regulars, because we don't want to add everything and never really update it. So the best thing you can do is actually click on forex, indices, commodities, cryptos, and so on and so on. We have this, which is the quarterly market outlook. Again, if you're a member, you can download that. This is actually produced by myself, the head of research in Dubai, and the head of research in Hong Kong. So they get a different opinion here, and we cover things like currency markets. You cover things like crude, gold, and cryptos. So cover all those main markets. As well, if you do trade shares, we started to produce some of these special earnings previews. So we did one on Netflix here. Netflix is supposed to release earnings on Wednesday next week. And you can read up about here. I think technically as well, Netflix is looking rather interesting. Or was looking interesting. See here on the daily. So this is the daily within a bit of a range. So if you read the report, you can understand a bit better sort of what to look out for. But even technically here, Netflix is starting to look rather interesting from a technical point of view. With a bit of a rectangle, potentially do something like that. And I think if you sort of squint hard enough, you can see head and shoulders even with that left, right shoulder and the head. So technically it's looking good. For the fundamentals and what to look out for, you have that report. Okay, let's see if you guys have any questions. No questions, no comments either. Okay, that's fine. Guys, click here as well. That will allow you guys to... Okay, there we go. So this is weird. Now, there's something weird here, actually. So we have Mansoor, good morning to you. And we have Abu Bakar asking, any comments on the Aussie or the Kiwi? Okay, I can tell you this. Aussie and Kiwi against the dollar, stay away from them. They're not trending right now. There was some few opportunities last week or earlier this week even, in something like in the New Zealand dollar versus the USD. Oh, sorry, managed to kick the camera. So as I said before, not everything I do for free. So I have a group of clients as well where I share with them what I'm trading and stuff like that. So, and here I told the guys, you know, on a break to the downside, you could scalp, but don't get too excited. I said we can probably go down, and I said we can probably let it go down. You can scalp, and then I said if we go up here, you can sell again, and for it to go down. So we had a bit of scalping there, but it's literally 50 pip or so, so it's not a lot. And then if you look at the bigger picture here, it's really not much happening. It's messy chart, nothing really super exciting here. And as I told the guys, the premium guys, and I'm telling everybody here as well on these free webinars, I think you will be wasting your time here. They're not going anywhere anytime soon, and I think we're gonna consolidate further. And I think we just need to wait, because there's unfortunately a situation now in markets where euro dollar is trading sideways, Aussie dollar is trading sideways. Yeah, so euro dollar trading sideways, Aussie dollar trading sideways, New Zealand dollar trading sideways. Dollar CAD has a bit of a bearish bias. Dollar Swiss is trading sideways as well. So the action is unfortunately not in currencies right now. And from a macro fundamental point of view, I don't think there's gonna be too much of an action here just yet, because it's all about the business cycle. So when the economy is improving across the world, some central banks to say, let's start to raise interest rates because we have high inflation, low unemployment rate, and high economic growth. So they start to increase interest rates. That drifts. If one country is doing that, then their currency tends to gain. But what's happening now is that the US is saying, oh, look, our economy is not doing as good as before. Inflation is not too high. We have all these trade wars, and I think we need to start cutting interest rates. Okay, you had a bit of a bullish momentum in the euro dollar, right, as you might remember. But then the Europeans said, oh, look, things are not going that good either here. So we're also going to cut. So suddenly you have two forces pushing things down. And here as well, in the case of the New Zealand dollar and also in the Aussie, they were cutting interest rates. So I think they cut interest rates about 2 times, I think, on the way down here. So you had a little bit of situation where the Americans were not cutting and not necessarily telling people that they were gonna cut. And then in New Zealand and Australia, they were cutting. But now, again, both central banks could cut. And that sort of creates a problem here where no one knows how to position themselves. On the other hand, you have the yen pairs. And as you know, we talked about the yen pairs earlier this year. And I said to you guys in this presentation, you know, we can probably sell here for it to go down. And we did surely go down. We went down with about, the whole market declined with 851 pip. But that was really pretty much the only really good. I mean, there's probably other good opportunities as well, but this was the only sort of really good, relatively easy thing to understand. Now, I still think the yen could gain if I'm right about, you know, maybe if the economy indeed slows down, but it needs to consolidate because it declined quite sharply. It's already consolidated since June, but you probably need to give it another month or two more consolidation, so we start to develop into something like this, and then from there we take it. For more on this, I strongly recommend the quarterly market outlook. So we got a question here if Nicholas Papas is from ATFX or not. So Investing Cube is an ATFX website. Look at it like that. Investing Cube is an ATFX website. It's a bit like Daily FX. Okay, guys, thanks so much for watching, and I'll see you guys on Monday. And before I forget, if you have any questions as well, if you want to be added to my WhatsApp feed, just send a message to this number. Just give me a sec. As well, with ATFX, we have special education. It's called the premium course. Now with the premium course, which is quite nice. Let's see here. You can send a message here. I will add you. And so if you have questions, you can just ping me via that WhatsApp. The premium course is about 3 hours and 45 minutes long. It's premium education stuff. It's things I learned over the last, since I started trading since 2006. So the idea is that you watch that video, and that gives you a good grasp of my latest trading strategy that I'm using. It also gives you access to another trading strategy that I used over the years that is more versatile. And we also start with a bit of the basics, of course, like every course does. And it's actually a totally free course right now. Minimum deposits is actually $5,000 to access that, so you just need to put 5,000 with ATFX. You open a real account with them, put 5,000, and you get access to it. But right now, it's actually open. So if you are interested, it's open for smaller deposits, that is. So if you are interested, just ping me here and let me know if you have any questions or anything like that. And I'm gonna speak with the head of sales and see if we can get you in for less than the $5,000. And that's probably gonna continue for a little while. Reason for that, the ATFX itself, it's a new broker in the English-speaking world. They're one of the bigger players in China. They also have offices in Dubai and a bunch of different Asian countries. They even have an office now in Mexico, and they're doing relatively good in places like Spain. But in the English-speaking world, you know, so many different brokers out there. They're relatively new, and they understand that, like, you know, why should people open accounts with ATFX? But one of the reasons could be the free premium education course. The other thing as well could be the free education course, and the other thing could be the one-on-one coaching. But to get one-on-one coaching, minimum is 5,000. Okay, guys, we're gonna wrap things up. Mansoor and Abu Bakar and everybody else watching, have a great weekend. I hope you guys are long in the stock markets like I am. Let's see what happens over the next few days and weeks. Hopefully we can have some very decent profits and gains here. Don't want to get too carried away. I'm gonna try to ride this to the upside until I get stopped out. Of course, I'm gonna cash out a bit eventually, but right now I've been accumulating, and hopefully we can see more of this going upwards over the next few weeks and months. Okay, have a great day. Don't forget to like the video. Just click on the like button here. And if you have any questions to me about the course, ATFX, or investing cube or anything else, then just let me know. Thank you, and bye-bye. See ya.